Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Snap-on Inc. quarterly report. Snap-on Incorporated offers a diverse range of businesses and services to professional users worldwide. The company's product offerings include hand tools, wrenches, sockets, ratchets, pliers, screwdrivers, saws, cutting tools, pruning tools, and torque measuring instruments, power tools. Cordless, pneumatic, hydraulic, and corded tools, tool storage products, tool chests, roll cabinets, and other storage solutions, diagnostic products, handheld and computer-based diagnostic tools, service and repair information, diagnostic software, electronic parts catalogs, business management systems, point-of-sale systems, and integrated systems for vehicle service shops, engineered solutions, customized solutions for specific industries and applications, service equipment, wheel alignment, wheel balancers, tire changers, vehicle lifts, test lane equipment, collision repair equipment, air conditioning service equipment, brake service equipment, fluid exchange equipment, transmission troubleshooting equipment, safety testing equipment, battery chargers, and hoists. In addition to its products, Snap-on Incorporated also offers financing programs to facilitate the sales of its products and support its franchise business after-sales support services, including training programs for customers. The stock price of Snap-on Inc. has increased by 16.16% over the past year due to several key factors. A strong Q3 2025 earnings report, with higher sales and net income compared to the previous year, was a major contributor. The company's operational momentum and growth in key segments, such as the Repair Systems and Information Group, also played a significant role. Successful product launches, including advanced diagnostic tools and software solutions, have positioned Snap-on for recurring high-margin revenue streams. Additionally, dividend increases and positive market sentiment, driven by analyst optimism and anticipation of earnings reports, have all contributed to the stock price increase. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the commercial and industrial group's vehicle service revenue growth, plus 6.2%, Snap-on Tools Group's significant revenue increase, plus 193%, and the Repair and Information Systems Group's substantial vehicle service revenue growth, plus 65.2%. Additionally, financial services experienced a notable revenue growth of plus 204%. On the other hand, revenue decline is primarily driven by the decline in sales of undercar equipment within the Repair and Information Systems Group, resulting in a mid-single-digit decline. Geographically, North America saw a significant revenue growth of plus 21%, while Europe experienced a decline of minus 18%. Net income at Snap-on Inc. experienced a mixed trend between quarterly and yearly periods. In Q3 2025, net income increased by $14.3 million, 5.6%, from $257.5 million to $271.8 million compared to the same period in 2024. However, on a year-to-date basis, net income decreased by $29.6 million, 3.8%, from 2024 to 2025. Profit margins also showed a decline. Gross margin decreased by 30 basis points in both Q3 and YTD 2025 compared to the same periods in 2024. Operating earnings as a percentage of revenues dropped from 26.9% in 2024 to 26% in 2025. While operating margin declined from 23% in 2024 to 21.9% in YTD 2025. The decrease in profit margins can be attributed to various factors, including a decline in gross margin and operating earnings as a percentage of revenues. Despite the increase in net income in Q3 2025, the overall trend suggests that Snap-on Inc.'s profitability has been impacted by changes in its business operations and market conditions. The company's financial performance indicates a steady increase in its ability to generate cash from operations. With an operating cash flow of $2,115.40 in 2025, the company has demonstrated a significant improvement over the previous year's figure of $1,944.90. This positive trend suggests that the company is effectively managing its resources and generating sufficient cash to support its business activities. The company's debt level and interest expenses have undergone significant changes over time. While total debt has increased by $8.3 million, long-term debt has decreased from $1,199.2 million to $981 million. However, notes payable have seen a substantial increase of 55% from $13.7 million to $21.3 million. On the other hand, interest expenses have shown mixed results, with some periods experiencing decreases and others slight increases or no change at all. The company's financial performance varied across different regions and segments in the recent period. Notably, North America was a standout performer, generating $889.7 million in revenue. In contrast, Europe and all other regions underperformed compared to North America. In terms of segments, Snap-on Tools Group led the way with $506 million in revenue, outpacing Commercial and Industrial Group, $367.7 million, and Repair Systems and Information Group, $464.8 million. This suggests that the company's tool business was a key driver of its success during this period. Management is optimistic about the company's outlook, citing several key points. The extra week in the 2025 fiscal year will provide additional revenue opportunities in the fourth quarter. With sufficient available cash and access to debt markets, management believes it can meet funding needs. The long-term strategy focuses on maintaining liquidity through continuous access to debt markets. The company expects continued progress through its proven capabilities, expanding customer base, and entering adjacent markets. Capital expenditures for 2025 are projected at $100 million, while the effective income tax rate is expected to be between 22–23%. Overall, management's comments suggest a positive outlook with a focus on growth and financial stability. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has paid dividends to its shareholders, indicating a commitment to distributing profits and rewarding investors. Secondly, the company has also bought back shares from the market, which can help boost earnings per share and increase investor value. That concludes the financial summary for Snap-on Inc. Feel free to comment below, and I will be happy to answer them when possible.